Well, my speculation is that right now they can invest up to 1% of their assets, and that corresponds to around $27 billion or $25 billion. My speculation is that this pilot program will go well. There's no reason for it not to. And they're going to increase the amount that, the proportion that they can invest in gold. That's my opinion. Who knows? They could go up to 5%, and that would be huge. Monday, May 26, 2025, Maneco 64, home of alternative economics and contrarian views. So it is Memorial Day in the US. It is a bank holiday here in the UK. We're not celebrating Memorial Day. But one thing I wanted to do is recommend a book on this Memorial Day. And it's not just for people honoring and mourning US military personnel, but it's for people whose family, father, brothers, whatever, have given their lives during wars. And the book I'm going to recommend is a contrarian book, as you'd probably expect. And it's this one here, War is a Racket by Brigadier General Smedley Butler. It's not a long book. It says here, unique among the high-ranking military officers of the U.S. and the world, I do not know of any other high-ranking military officer of the U.S. or the world who has spoken or written such most important truths and facts about the nature and causes of war. General Butler wrote these in simple and direct language that everyone can understand. His honesty, care for society, humanity, and justice for all, and profound insights are self-evident in his writing. Moreover, it is even much more relevant now than when it was written in 1935, so 90 years ago. Nothing changes. War is a Racket is the title of two works, a speech and a booklet by retired United States Marine Corps Major General and two-time Medal of Honor recipient Smedley D. Butler. In them, Butler frankly discusses from his experience as a career military officer how business interests commercially benefit, including war profiteering from warfare. So there you go. Happy Memorial Day for all my US viewers, and happy bank holiday for my UK viewers. So what are we going to talk about today? Well, we're going to talk about China and how, in my opinion, China is transforming the gold market. And I'm going to reference this really quickly here. It's an editorial. A lot of you, or most of you, know about this, that I cut it out back in 2004 from the FT. I found it so outrageous that I laminated it. At the time, we didn't really have iPhones, so we still read the physical paper. And in this editorial from April 16th, 2004, the FT wrote, "Going, going, gold." So there you go, going, going, gold. I even wrote the date here and where gold was. Well, it was at $400 an ounce. And it says, the pointlessness of holding bullion continues to sink in. And at the end, it says here, whatever the speed, the direction is clear. Gold is on its way out as an investment and as a reserve asset. 3 cheers for that. So the reason I'm showing this is it shows how our mainstream press, financial press, whatever press, they're bought and paid for by the powers that be, by the bankers who don't want the public to protect themselves from fiat currency inflation. But the Chinese, for some reason, they want the public to protect themselves. They want the Chinese to protect their savings. which is ironic because I thought they're supposed to be the baddies, the communists, right? The authoritarians. But anyway, I'm going to put this right here on the screen right now. And you can pause, do a screenshot, and read it yourself. So why do I think China then could transform the gold market? Well, if you've been listening to me for the last few years, you know that I've been covering the fact that central banks, especially China, Russia, Poland, India, a lot of the global south countries have been buying gold, net buying of gold, hand over fist since 2022. And Russia and China have been buying, well, for the last couple of decades, adding on to their reserves. And recently, in February, China announced this, and this is from the World Gold Council's website, and this is dated February 19th, 2025. China's insurance funds inject new vitality into global and domestic gold markets. So let's go through the story. You probably have heard of it. And then I'm going to give you my opinion on it and what might happen. It's going to be a speculative exercise. And we're going to look at Japan as well, because their insurance companies are having trouble as well. And we'll see why. So it says here, the National Financial Regulatory Administration of China has issued the notice on launching a pilot program for insurance funds to invest in gold, hereinafter referred to as the notice, allowing 10 insurance companies to invest in gold effective immediately upon the release of the notice on February 7th. Well, when you speak to the average person out there, or you speak even to financial advisors, they say, oh, no, you shouldn't invest in gold. It's too risky. It's a commodity, right? But let's continue reading this. The notice specifies requirements in the following three aspects. First, it defines the business scope and the form of investment in gold and allows 10. Well, I'm going to skip this part. The really interesting part is this one here. It says, Gold is a generator of long-term returns, providing an average annual return of 8.6% in US dollars since the end of the Bretton Woods system in 1971. That's annualized. That's not since the beginning of this century. That's 1971. Meanwhile, since the inception of the Shanghai Gold Exchange in 2002, gold price in Chinese yuan has seen a higher annualized return of 9.8%. China, the world's second largest insurance market, has a growing demand for diversifying its insurance funds into new asset classes. Gold's low correlation with other assets and its stable long-term returns. Well, that doesn't just apply to Chinese insurance companies or central banks. It should apply to you, the individual. You should be your own central bank or your own insurance company, so to speak. And that's why I personally have been trying to acquire as much gold and silver for a while now. And many of you have asked me how to do it. Well, I've got a couple of affiliates, and if you want to look them up, they're below in the description. Miles Franklin in the US and Gold Investments in the UK. And if you do contact them, make sure you tell them that Mario or Maneko64 sent you. Anyway, let's continue. Gold's low correlation, gold's low correlation with other assets and its stable long-term returns make it a high-quality, non-traditional asset for insurance portfolios. Incorporating gold into these portfolios brings the potential for lower volatility, higher returns, and an optimized risk-return profile, preserving or even enhancing the asset value. Furthermore, amid rising global uncertainties, Gold's well-established role as a hedge against risk positions it as an effective tool for insurance funds to navigate global systemic risks. So what's my speculation about this program? It's a pilot program. They're trying it out. And they started right away on February 7th, the date the notice came out. That's how serious the Chinese regulatory authorities are. Well, my speculation is that right now they can invest up to 1% of their assets, and that corresponds to around $27 billion or $25 billion. My speculation is that this pilot program will go well. There's no reason for it not to. And they're going to increase the amount that, the proportion that they can invest in gold. That's my opinion. Who knows? They could go up to 5%, and that would be huge. And that would get the ball rolling, not just for China, but for countries like Japan. And why do I say that? Well, we've seen recently that Japanese government bonds have been dropping quite a lot, and that's really important in terms of the insurance industry, because insurance companies they hold government bonds because they've been conditioned to think that that government bonds are safe and they are stable and they're not volatile, but they're anything but now, the JGBs, because they were artificially kept very high in terms of price and very low in terms of yield for decades by the Bank of Japan and its money printing or QE exercise. But now, with interest rates all around the world having gone up, Japan has to allow rates to go up. It can't be as aggressive. And Japanese government bonds have gone from yielding negative, even up to the 40-year, to now being up to like 3.5%, for example, the 40-year. The 10-year is approaching 2%. Yes, it's still at 1.5%, but I won't be surprised if it's up to 2% by next year. So what happens is Japanese insurance companies' assets, their unrealized losses are piling up, because when yields go up, bond prices go down. So that's very serious. Prior to 2022, it was plain sailing because yields, interest rates kept going lower, the value of bonds kept going up, and it wasn't a problem. But now it's all reversing. So my speculation here is that we will see soon Japan come out with their own pilot program and allow insurance companies in Japan to start investing in gold. And I think it's going to spread like wildfire, even for insurance companies here in the UK and elsewhere in the West, because the bull market in bonds is over. Yes, there's still a lot of people out there who are in denial, in my opinion. Yes, we can have counter-trend rallies and counter-trend drops in yields, counter-trend rallies in price of bonds, and counter-trend drops in yields. But that's all it is, counter-trend. Longer term, yields are going to go a lot higher, and that's why there will be a rush to gold. And that's why I'm not concerned about the price volatility in gold. It's more like price volatility of fiat currencies, and that's why I'm holding on to it. So what I think, as I said, to sum up, I think we're going to see an increase in the proportion that Chinese insurance companies can invest, maybe up to 5%, maybe even more. Maybe in a decade's time, it will be like 10, 15%. And that will basically bring back gold from the FT's, denigration, right? The FT, they'll have to eat humble pie one of these days, hopefully. And so the markets are shut in the US and the UK. The futures, I've noticed, are open. So there is a little bit of activity going on. I noticed that President Trump is continuing to play ping pong with his tariff policy. He's kind of delayed this 50% tariff on Europe that he hadn't even imposed until July 9th. So the markets have reacted positively. The Dow is up 400 points, or at 1%. The NASDAQ 100 is up 1.2%. Those are the futures, of course. Gold has come off a little bit here. We're at 3,336, down about 21. The high's been 3,358. Silver, on the other hand, though, is unchanged. It's trading around 33.50. So, yeah, that's what's going on out there. And hold on to your gold for dear life, as I said many times. And don't believe everything you read in the financial press. And yes, keep an eye on what the central bankers are doing and what the big financial institutions like the insurance companies are doing. And with that, I'm going to wish you all a great Memorial Day, a great bank holiday, and a great day for those of you who don't have a holiday. And yeah, I'll talk to you later. Take care. Bye.